Welcome to today's mentoring session. And as usual, I'll be starting this mentoring session with the weekly sectoral analysis. In front of the screen, we have the Nifty current month futures. On the left-hand side, we have the daily chart, and on the right-hand side, we have the weekly chart. So first, we can see that in the weekly chart, the trend is completely flat. Last week, we had a high wave candle, and this week we have an inverted hammer, or you can call it a shooting star. It clearly shows that there is some sort of selling pressure at higher levels, somewhere around 17,440 or 450. In the daily time frame charts, I think it is even more clear, especially if you check the RSI. It is moving just around nowhere. It is completely range bound. It is completely on the upside. It is just above 50, and on the downside, it is just above 40. So this is a very, very simple and easy sign that there is a lack of direction in the market, and this is certainly not a good time to trade. Majority of the trades in this sort of scenario will end in stop losses, and I think these type of times in markets do exist. It's not a surprise for many of the traders, because when markets are trending very, very nicely up or on the downside, generally people don't ask the question why we are making money so effortlessly. So similarly, there will be tough times and there will be again be good times. So we just have to wait for the price action and the indicators both to come together and start giving us some good signals. But talking in terms of levels, I think until and unless we don't see any close in Nifty futures, minimum about 17,500, and it has to sustain, because if it just gives a close above 17,500, all right, and then the next day, if it opens gap down again within back in the range, it absolutely makes no sense, because that is what has been happening recently. If you check last 2 days, I was just checking day before, I not day before yesterday, I was checking on 27th of April. I saw that the candle which appeared on 25th of April had a lower wick. Then again on this particular day, 26th of April, it had a small lower wick, but it still had. Then again on 27th April, it had a lower wick. Then on 28th April, just before the close, it was looking very promising that something good might happen. Obviously, we are not above the resistance, but you can say that in last couple of days, market didn't go down that much. So as a trader, you might feel that if it closes above 17,500, then possibly some sort of positive move could happen. And immediately the next day, you can see a bummer of a day, and suddenly market collapses down, which was not at all expected by many people. But that is what happens. In fact, on Twitter, I did post today in a very funny manner on lighter note that why is Nifty closing in red today? Just because it closed in positive yesterday. That's what a range bound market does. So this is going to happen. We don't need to be surprised. On the downside, I think we have a support at 16,850. If we close below this and sustain below it for at least a couple of days, we might see some downside move happening. And on the upside, I've already given the levels are 17,500 or higher than that. Bank Nifty futures, we can clearly see that it has more clarity in terms of negativity. In terms of negativity, what I mean to say is, if you see the candle which occurred last week was a high wave candle, but in the Bank Nifty future, we had a big red candle. So it shows that there is a little bit more selling pressure coming up in the Bank Nifty rather than the Nifty futures chart. And again, in Bank Nifty, you can see that on the upside, it is capped at 37,200, which has not been even tested on the upside post 19th of April. And on the downside, we have a support at possibly 35,548. So you can catch the low of 25th of April. If we close below that particular low and sustain below it, we might see some downside moves happening in Bank Nifty future also. If you check the private banking charts, and then if you check the PSU banking charts, you will clearly see that the private banking charts are a little bit more negative. But today's move was a little bit more surprising in the context of PSU banks, because today we did see some sort of serious selling pressure happening in the PSU Banks also. In the private banks, again, talking of levels, there is a support somewhere around at 17,959 or 17,950, you can say. If we close below it, we will see some sort of selling pressure coming in. And if you check stocks like Axis Bank, which was consolidating till last week, I mentioned it in my previous weekly sectoral analysis that these stocks are consolidating right now, and after consolidation we will understand where they are going. So you can see after the consolidation the stocks have moved down, not up. So this is certainly not a good sign. The second stock which I did talk about was ICICI Bank. This stock has been able to stay afloat, no doubt about that. But if you see properly, again we do have a big red candle, not a big red candle, it is a shooting star basically, but we have back to back two shooting stars in the weekly chart. So again, this is not a good sign. This is clearly showing that there is some sort of selling pressure between the levels of 780 and possibly somewhere around 770. So this 10-point range, 780 to 770, it is surely giving a lot of selling pressure to this particular stock. PSU Banks, you can say again, the first candle in the weekly time frame just 2 weeks back was a sort of, not exactly a hanging man, but a sort of hanging man. Then we had a big red candle, and now we have a inverted hammer or a shooting star. So again, this is not a good sign. If you check SBI, it is still staying afloat. It's still, if you just put away this today's candle, it looks fine. But today's, if you check the chart with today's candle, then it will look not that great. So again, if it closes below 488 or something, I think all the positivity which was created in the SBI bank charts, I think it will be destroyed. As far as it stays above this level, I think we are safe. Now only time will be able to tell what will be happening in this particular stock in the next few days. Okay, metal pack is one pack which is still looking in terms of the weekly chart, you can say it is looking pretty strong. This is just a retracement, or you can say it is just a dip, because it is taking support from the previous high. So there is some sort of, there can be some sort of buying which can come up over here. Only time will tell us, because there has been one big hammer over here. But after this hammer, I guess not much encouraging candles have been made over here. So only time will tell what type of candles, what type of price action we'll be seeing over here. If the price keeps on going higher, then you will be able to see some sort of beautiful swing trades coming up in metal stocks. But again, please do not forget, overall market is extremely choppy. So out of 4 to 5 stocks, just pick 1 or 2 good stocks. And that also, when you're trading, please do deploy less than 50% position sizing, which you normally do in a normal trending scenario, because the current scenario in the market is about saving your trading capital, is all about just staying on the back foot and possibly trying to save your capital rather than being extremely aggressive in your trading strategy. Because if you lose all your money in this sort of sideways market, how will you be able to make money when the market starts trending again on the upside or maybe on the downside, right? So this is what you need to understand. It's a very common sense, and this is what you have to live with for next few weeks or maybe next few days. All right. So we are at a support band or at a support level. You can see very clearly in the weekly chart, in the daily chart. But again, if the support breaks and if the price keeps going down, just avoid the metal pack also, because price needs to go higher from over here. If it does not happen, then the entire context that the metal stocks are looking bullish will be of no use. Auto pack was looking very interesting till last week for me, because it closed above this resistance level, you can see. And what has happened after that is very typical, you can say, choppy market scenario. This is what happens in a choppy market. Best of the breakouts, they fail. Why they fail? Because That's what happens in choppy market. Out of possibly say you have 5 tools which you use. Generally, when you are having 5 tools in your trading strategy, and out of that 5 tools, at least 3 are saying that the trade is okay, the trade is good, and 2 are saying that the trade is not good. And if you take a trade, chances are that the trade will be profitable, more than 50% chances. In a range bound market, even at times when you have 4 or 5 tools saying yes, there is a very good chance that your trade will fail. And that is what has happened over here. If it breaks this support, again, you will see some downside happening. So that is a very basic characteristic of a choppy market, of a kangaroo market, or a range bound market. So you cannot do anything about that. What you can only do is you can save your capital by reducing your position sizing. All right. Because one big move will, pay for all your small stop losses. You need to understand that. Now, finance pack, I think yes, last week I had made it very clear. If we close below 16,440 or possibly even this particular candle, we'll be seeing a downside move happening. I think this particular sector is still staying afloat. Some sort of support is visible over here. But once I think we close below this, you'll see some selling pressure coming over here. IT pack, I think I had mentioned in the Twitter handle yesterday. We do have a crisp, clear lower low in terms of price and higher low in terms of RSI. And if we compare both of them, we do have a clear-cut positive divergence. And this positive divergence has come up at a point when this particular index is at a support. After the first initial hammer candle, we do have a high wave candle. This is also a sign that possibly the power or the momentum of that particular index of going down is getting lesser and lesser day by day. And after that, we have a big red candle over here. But generally, this sort of bearish formations, last 2 days formations, happening at a point or being made at a point when the particular structure of that trend is looking bullish from a contrarian trader's view, not a trend trader's view, but a contrarian trader's view. This is very helpful. So generally, this adds to the confirmation that probably, again, there's only a 50% probability that if this is not broken, this low is not broken, prices will move higher. So generally, bearish signals at a point when some positivity is seen in the eyes of a contrarian trader, it is actually a positive sign. Now only time will tell what's going to happen ahead. Pharma pack. Pharma pack is, I think completely over the place. It is in absolute sideways trend. You can see the RSI is also very much sideways. It's going up. Again, it's coming down. Even the price is within the 2 dual moving averages. And if you check in the daily chart, you can see prices are going down, up, down, again up and again down. So it is completely sideways. As of now, I do not have any comments. One stock which I generally track is Sun Pharma. Sun Pharma was looking very, very bullish somewhere over here. It was looking okay, not extremely great, but decent enough. And then when it started going above this level, all right, when it started going above this level, if you check today's chart, this was such a beautiful candle. If you add volumes over here, this was a very decent volume. In fact, a very high volume candle. And what's happened suddenly? Sell off and the prices did fall down. So this is what generally happens in a range bound market. Even the best looking charts, they do fail. And, we generally cannot do anything about that. Okay. So now let's move on to the next index, which is the FMCG index. FMCG index is looking pretty decent in comparison to all other indexes, because if you check other indexes, at times prices are moving below the dual moving averages. In some indexes, if the price is higher, then we'll see a negative candle like a shooting star. If you see a middle pack, again, you can see the direction of the price is down. But if you check the FMCG pack, we do have a big green candle over here. Yes, the wick is higher, but in comparison to other indexes, it's looking pretty decent. But again, today's candle in the daily chart is a little bit unsettling, considering that if it closes, if we have a big red candle closing below the lows of 28th April, then we'll see some profit booking happening in the FMCG pack. And in case if you have a close above this recent high at 38,852, you will see the FMCG stocks going higher. Realty pack, again, completely range bound. You can say that a typical show of a range bound market, stocks coming down, the index coming down, breaking this particular low and closing below this support. There is one more support over here. Okay, I somehow by mistake I actually deleted this particular bar, but there is some sort of support over here, and from this support there is a bounce back, and from this bounce back we can see 1, 2, 3 and 4. So total 4 days bounce did happen, but at the end it was not able to surpass this particular resistance, because earlier it was a support, and once it has surpassed this and when it comes back it becomes a resistance. So until and unless it doesn't close above 454 with a big red candle, there is no point of looking at this index in terms of a bullish view. And if we close below, say probably 430 or 425, then we'll be able to see some sort of downside move happening in the realty pack. Okay. Consumption index, I think on 26th of April, 2-3 days back, a lot of stocks in consumption pack gave breakouts. At least main 4-5 stocks had given decent short-term breakouts. But again, if you see what has happened, this particular candle, then we see a very small candle, again a small candle, and bang, again a big red candle. So even if the breakouts are happening, none of the breakouts are actually sustaining. So generally what happens in a bullish market or in a bearish market, the first breakout happens, then we have a candle, and then follow through buying happens. The candles may be small or big, but the direction will stay up. Over here, what is happening? We have one big green candle, one small, second small, and then again the price comes down. This is not the way a normal trending market actually works. Consistency in buying, if it happens, then only you will be able to make money in the markets. Okay. So this particular index, I think mid-cap index is into a completely consolidation phase. I think it is just moving up and down. If you see properly in the daily chart, we have one big down move, then a couple of days up move, then again down, up, again down, then up and again down. So continuous sideways movement is happening. And in the weekly chart, you can see there is some sort of selling pressure which is coming up from the trend line resistance, which is from 18th of October 2021. So this is a pretty old trend line. Now, I think only time will tell that after this consolidation, what happens, whether we do have a up move or we do have a down move. Only time will tell. And to sum it all, I think overall market is clearly lacking a sense of direction. Not best of the times to make money. But as a trader, I would say that a character of a trader is tested at the best level in this sort of market. And generally thoughts will arise that, is my system working? Am I a good trader? Are other people making money and I'm not making money? All these sort of wrong questions will come up. But we need to understand that whatever systems you're using at your own end, say for example, if you're a trend trader, I am more of a trend trader, considering whether it is a swing trade or a positional trade. Okay. So what you can do, one simple thing is just pick any other market other than Indian markets, plot your system on that market and just check that currently that market is providing returns to you or not. If the answer is yes, it clearly means this is a temporary phase, and this temporary phase will go off. And I think you just need to wait with patience, trade as less as possible, deploy 50% less position sizing. Once the market starts trending, I think you will be able to make money. All right. So trade wisely, trade less, stay safe. Thank you.